Welcome to the comprehensive problem for Chapter 5. This would be finishing week 6 and looking back at Chapter 5, and actually it's quite a culmination of the chapters, perhaps like 4 or 5 together, perhaps even back as far as 3 with some of those adjusting entries you learned in the 2-3 chapter combination, and then merchandising in the 4-5 chapter combination. So as we look at this comprehensive problem, you'll be writing journal entries as you have been. They're for I knew I was going to do this, Pacificilio, I think it would be. Anyway, they're our security services company, and we've been doing their work for them every week throughout the chapter. We've been keeping their books for them and posting to their T accounts and preparing their financial statements. And for Chapter 5, the comprehensive problem is on page 310 and 311. And this is their services as of January 2015. And they have the following normal balances. So the normal balance is the way that the account is increased. So it has cash, accounts receivable, supplies, prepaid rent, merchandise, land. So those are the assets with which we are familiar. Those normal balances would all be debits. We would want to put a little line after land and add those together and make sure that they equaled one another. And then accounts payable, salaries payable are our 2 liabilities. Their normal balance is a credit. So we would have the total liabilities being the sum of those 2 credits. And then we have owner's equity. The contributed equity is common stock, where people contribute money to our business and buy our common stock. And then retained earnings, where it's the earned capital of the business, where managers decide to keep the revenues of the business in the business. So then you would add together the sum of the accounts payable and the sum of the liabilities and the sum of the owner's equity to make sure that those 2 added together to equal the assets. So that's how we use these beginning trial balances. And then during 2015, we experienced the following transactions. So they start at transaction 1 and go down through transaction 18. And so these are, again, just practicing writing journal entries the way we're learning to write journal entries. This week, what I decided to do, so you can see over here I have the solution to that problem. Pacificilio, I think. Security system, we have the event number, the account title, the debit and the credit. And as you can see by looking at these, I have you writing every other one. So you're going to write every other transaction that we have here. And in some of them, I have left the calculations for you to be able to see. So this is this week's lesson and how many units were in this inventory for you to be able to calculate that 250. So I'm going to have to start looking ahead to see where the real key transactions are and make sure that you have to do that one. This time's pretty easy to just read about it, but you're doing a lot with the Excel, so I think that there will be plenty of practice here for ending inventory. So if we look at these transactions, it says paid the salaries payable from 2014. So we'll be debiting salaries payable, the liability, to make it go down because we don't owe those people that money anymore. And we're beginning crediting cash to make that asset go down because we don't have that cash anymore. So as we look at this debit and this credit for $1,500, that's how we can explain what happened within the debit and the credit. The next transaction says, on January 15th, purchased 20 standard alarm systems for cash for a cost of $250 each. So we have 20 times 250. So I'm hoping that that's 5,000. I forgot to get the solutions manual out, and I'm just doing that in my head. So as we look at merchandise inventory, guess it needs another consonant in there, doesn't it? We're going to debit merchandise inventory, an asset that's going up, and I think it's going up by $5,000, but you can check me because I'm not going to be saving this anyway. And then cash. Now remember, we do have to come over and make this an even number of times, so I think we decided that the solution manual was about 11 spaces, so that looks pretty good. So we paid, purchased for cash at a cost of $250. So for cash is the operative word to put in cash. And then on February 1st, paid the account payable of $980, but not within the discount period. The company uses the gross method. So when we look at, since it uses the gross method, it would be taking the discounts every time it recorded the transaction. So now it's a discount lost. It's an interest cost that they have to pay on the merchandise that they bought, that they missed the discount. So now we have accounts payable was $890 because that was the gross amount we expected to have to pay. And now it's interest expense. It's somebody's responsibility to pay that interest cost of $20 because we didn't take the discount, and then cash. Now if we look at this and look at the merchandise inventory, there were 9 units that we paid $240 for, and we had 980 of accounts payable. So when we had 980 of accounts payable, that we could get rid of, but it says here we had to pay the accounts payable but not within the discount period. So the other $20 is the 2% on $1,000 that we had purchased. So as we go through and do these transactions, we want to go through and look at the alternative methods that are being presented to us. On March 1, leased a business van, paid $4,800 for a 1-year lease in advance. So paid is going to be cash, and it says $7,200 for a 1-year lease. So we're going to have a debit to a prepaid lease because that's an asset and it's going up, and we've paid for this lease in advance, and it's going to be $7,200. And then, oh, I'm one off. Oh, I'm buying a van. Excuse me. Sorry. My eye went off there for a minute. Looking at too many things, I think. So, number 4 says, leased a business van. So, I'm going to debit automobiles, or I could do van if I wanted to. So, debit automobiles, and it's going to be $4,800. And then no, I'm going to go back to prepaid. Now they're calling it prepaid rent, so I better do it their way. I was going to do it prepaid lease. And this is going to be the van. And then cash. There's 11, I think. And that's going to be $4,800. So you just continue to write all of those entries until you have them all written. You can do just like I did, look at something and decide you want prepaid rent or prepaid lease. I'm going to just slash this for you with rent. You may do it either way you want to. I'll know once you put that van in there what you think you were doing. And so you can look ahead. You can use their journal entries as a guide. Here is the cost of goods sold formula where you sold 9 units and that cost $240. So you made a certain amount of money. 20 units at $250, 25 units at $260, and 6 units at $265, and then you add them all up and you get cost of goods sold for the whole total. So 9 is saying installed 60 alarm systems for $33,000. 22,000 of the sales were on account, so I'm going to have an account receivable where these people are going to pay me in the future, and 11,000 were cost. Be sure to record the cost using a perpetual FIFO. So since it's a perpetual FIFO, we would use the merchandise inventory of 9 to start out with, and that's the first amount we have up here is merchandise inventory of 9. And then we would look at our purchases and we would go for the purchased 20 at $250, and then purchased supplies, purchased another 25 alarms, and then purchased another 30, but we only installed 60. So we have 9 and 20 make 29, and 49, 54, 60 are here, and that's how many we sold, but that leaves us 24 in the ending inventory at this point for any future sales. So then we're going to keep going and write, here's a sale coming up, I'm going to bet, for an inventory, and then we have some adjusting entries starting with number 19, and I left some of the triggers for you here to see what had to be have an adjusting entry. Left an example here, but these are blank, so you'll have to figure them out. The 16 is the office. 19 is the office supplies expense. The rent for both the van and the office building, so you'll have to do the van here and the office building here. And then we have, I think coming up on the other side of this break, in the unearned revenues, and I did leave you the unearned revenues, and then 22 is the accrued salaries. So you'll do those adjusting entry calculations. And then I have you post the cash account this time. So you won't be posting any of those adjusting entries because adjusting entries never involve cash. But I'm just going to ask you to post the cash account and get a balance for cash. But then nothing else has to be posted. All the T accounts are posted for you. That's the only one you have to post. But you have to prepare the first half of the trial balance from the expense accounts on down, cost of goods sold, all the expense accounts I left in, because there's quite a lot of those and they're all alike. It's pretty easy to see. But it's before then for the assets, liabilities, owners' equities, and revenue accounts that you're going to have to put in the names and put in the amounts, whether they're in the debit or the credit side. And remember, the normal balance is how they're increased. So you're going to come up here, you're going to look for these normal balances. So you have to do cash, but then after you get your cash balance, there's receivables. Notice it's on the debit side. There's supplies, it's on the debit side. There's prepaid rent, it's on the debit side. So you're going to just keep going like that, merchandise, inventory, land, and then you're at the end of the assets. You come back up here, you got payables. Now it's on the credit side. So you're going to go over to the other column, the credit column. Here's the unearned revenues, here's the salaries payable. You come back and find all those T account balances and put them into this trial balance and prove that they equal one another. Don't leave them, because if I find mistakes, then I'll know you didn't really prove them. I started to leave that out and force you to prove it, but I thought I better give it to you as a check figure just to help you in case. Here's an income statement and you have to put the amounts in the income statement. Here's the statement of owner's equity. That's very similar to what I had you do last week. And then I just have you calculate the two totals for the assets and the liabilities plus stockholders' equity in the balance sheet, just proving the balance between the two of them. Nothing in the cash flow statement. But I do have these entries that I left out of the closing entries. So there's a lot of parts of the closing entries, but I want you to go find what these other entries are in the closing entries. And then here are your closing T accounts. Then here's your post-closing trial balance, and it's all done. I just want you to prove this total down here. So I think there's a lot of practice with journal entries, regular transaction events, and adjusting entries, and then a little bit of posting, and then more preparation of financial statements. So this comprehensive problem, we're beginning to get a routine going with this company. We're beginning to see different parts of the comprehensive problem and of the accounting process, from looking at the source documents of the events, writing the journal entries, posting them to the general ledger, T accounts, getting T account balances, and then preparing a preliminary trial balance, then doing the adjusting entries and posting those, doing the closing entries, and then preparing the post-closing trial balance. So I'm just trying to mix it up a little bit for you, having you do some different things, but I'm not yet ready to ask you to do an entire one of these projects. We will have to do that towards the end of the class, but it'll take us that long before we get there. So good luck with this comprehensive problem, and again, if you ever have any questions, you're welcome to send me an email. You're welcome to come to class and ask me a question. You're welcome to come by my office hours, and I'll be happy to help you then. And this will conclude our discussion of week 6, chapter 5, and accounting for inventories. Thanks for a good week.